Welcome back to Fair Fade Investing. Today we're taking a look at Gamestop. So right away there's signs of significant overvaluation. They do have a lot of cash on hand, so they can pay down the entirety of their debts if they chose to. And then from there it looks like their margins are pretty mediocre in the industry. And versus history, these are some of the lowest gross margins they've had in the last 10 years. But they are profitable. So if they chose to pay down their debts entirely and they had this 0.13 net margin, they're not making very much money, but they are making money. So they, at least with their current margins, they have enough to stay above water. The interesting thing about the short squeeze is that all these companies have put in shorts, basically buying the stock at a certain price, selling it at that price, and then betting on giving it back at a later time for cheaper. And the internet community and Wall Street bets have recognized this and collectively pushed the stock price higher by buying shares, which forced the institutions to buy back at a higher price and lose money. So it's pretty similar to the last time that this happened with GameStop. It's pretty crazy to see that the stock has gone up 300% in less than a month, but it does eventually become a point of don't be the last guy holding the bag. And so a little bit of a gamble, even though they are profitable, they have enough cash. Looking at that price to earnings ratio, we can see that with 4,875 times what they earn and a median of 11 in the last 10 years, they're pretty close to that maximum. So my thoughts here are if it reaches 6,000 or even like 5,000 conservatively, I'm going to say, depending on your risk tolerance, if you think it's going to make a new maximum for its price to earnings, then that's one thing. But this is probably what I'm assuming is the 2020 peak for GameStop for price to earnings. So I would expect it to come somewhere around this area. I wouldn't expect 12,000 or something like that, but it depends on your risk tolerance. So this is something I would be considering for this type of investment. Looking at their financials on an annual basis, we can see that their revenues are steadily declining, although they were profitable, became unprofitable, and then regained that profitability here in the most recent quarter. So probably another reason why the Wall Street bets community has come together and collectively pushed this back and fought against the institutional investment firms that are shorting it. The cash to debt ratio looks a little bit sporadic, although they have more cash than they have debts in the last 3 years, so I'm not too concerned with the debt situation. Looking at the shares outstanding, we can see that there's a big red bar here, indicating that maybe they sold more shares so they could raise some cash and now have a better cash debt ratio. Looking at their business by segment, we can see that they have 14% in collectibles, 28.9% in software, 56.8% in hardware, and most of their sales are coming from the United States. So all in all, GameStop does surprise me. It doesn't necessarily look like the type of investment that I'm comfortable making for myself. It's not really in my niche of expertise with the short squeezes and quick pump and dumps, or the last one holding loses. I'm more interested in a steady growth investment, or even some, 100% in 6 months. That sounds great, or even higher. But I don't necessarily enjoy the volatility of something like GameStop. But it is very interesting to me to see how a community like Wall Street Bets can come together, rally through a YouTuber, and push a stock like GameStop up hundreds of percent in a matter of weeks. If you like these type of videos, make sure to like and subscribe to the channel. And if you're new to investing, I actually put together a guidebook for beginner or intermediate investors just to give tips, tricks, insights, and things that I wish I had known when I started out investing. So if you're interested in that, I'll leave the link in the description. And let me know what you guys think. Do you think it's going to be a very similar situation to 2020 where it spikes up and down and then falls back to slope again?